When it comes to your retirement, do you want to have the same old plan everyone else has? Of course not. You're unique and have your own goals and dreams. Don't be treated just like a number. This is your retirement. So it's time to think differently. And you're in luck because you've found the Retire Your Way podcast with ILG Financial. At ILG Financial, you won't find generic, run-of-the-mill plans containing the same old cookie-cutter solutions. Dave, Chase, and the ILG Financial team focus on building one retirement at a time using their Think Differently philosophy. And that means your own comprehensive plan with customized solutions built to achieve just one goal, yours. So put on your Think Differently hats and get ready to take back control of your retirement today and for all the tomorrows to come. ILG Financial's Retire Your Way podcast was created just for you, and it's starting right now.
Welcome to the Retire Your Way podcast. I'm Ron Stutz along with Chase Lopez and Hamilton Morales. Yes, we're back to talk more about Social Security, and they're going to get into the weeds on this particular situation in just a moment here. But let me tell you that, first of all, our special guest today is Hamilton Morales, Senior Vice President at Financial Independence Group and a Social Security expert. And, of course, Chase Lopez at ILG Financial. If you'd like to call and get an appointment to have a conversation about your individual Social Security situation or anything having to do with your financial life, call 540-720-5656. That is 540-720-5656. Chase Lopez at ILG Financial. Of course, Dave Lopez is here as well. He's the founder, and ILGfinancial.com is the website always to find him online. Income, legacy, growth, it's all right here at ILG Financial. Now, let's get back to our conversation about Social Security. Once again, Chase Lopez along with Hamilton Morales.
So let's talk about another kind of use the term strategy, right? Another quirky rule that's inside of the Social Security rules there, which is, and we get this quite a bit here in the area that we work in. Let's say we were talking about in a relationship, different, what's the word? Roles, right?
Roles.
So let's say one spouse was working during their working years, right? And let's say the other spouse was staying home with the kids, right? They don't necessarily have all of the required credits to, get a full Social Security check.
Right.
What does Social Security have in place to kind of address those type of situations?
Yeah. So they do have a spousal benefit that is available to spouses. And so basically what happens is in a scenario like that, where you have one spouse is working and you have the other spouse staying at home with the kids and has not gotten their 40 credits, once the working spouse retires and decides to turn on their Social Security, then the stay-at-home spouse in this case would be eligible for a spousal benefit as early as their age 62. Okay? So basically what that is, it's half of the working spouse's full retirement age benefit amount. I should say, let me back that up to half.
Okay.
Up to half. And the reason why I say up to half, and again, it's based off of the full retirement age benefit amount, not the working spouse's 62 or 70 or whatever they're currently receiving in their benefit. It's always calculated off of the full retirement age benefit amount. And the reason why I say up to 50% is because if that stay-at-home spouse decides to activate the spousal benefit prior to their full retirement age, then it will be reduced.
Gotcha.
Based off of the age they are when they turn it on.
So if they turn it on at 62, it wouldn't be half of the full retirement age of the working spouse. It would be less than half, right? Because
correct.
They reduce it because of their
correct.
age.
In fact, if you're looking at a full retirement age of 66 and they turned it on at 62, a spousal benefit gets a higher reduction than an actual benefit, and that would actually be a 30% reduction in that particular scenario. Yeah.
Gotcha. So I know going back to what we talked about before, right? These are all kind of things that are very specific to certain folks, right? That we have to make sure that we take, all of those different considerations into account when we're talking about when to turn on Social Security. Now we have this added monkey wrench into everything, which is the spousal benefit, and how that can kind of affect everything.
Well, and also keep in mind that you don't have to not qualify for your own benefits to get spousal. You might be able to get some kind of a spousal benefit even though you get your own Social Security benefits. And there's a calculation that they use. Once both spouses have turned on their benefits, Social Security is going to look at the lower of the two. Social Security is going to look at their full retirement age benefit amount, and they're going to compare it to half of the higher full retirement age benefit amount. And if the one who has the lower of the two, if their full amount is less than the other's half, then they qualify for a spousal benefit. And basically what Social Security does is they take the full amount and the half, and they subtract those from each other, and the difference is the actual spousal benefit, and they take that money and put it on top of what the spouse is getting right now. And so again, you still have the issue of it could be reduced if the person is under full retirement age when they activate all this. But if the spouse that has the lower of the two and that qualifies for that spousal portion, let's say they turn their benefit on at their full retirement age, so they're going to get their full benefit amount, and then they'll get the full spousal benefit. When you add those together, those two together will equal half of the other spouse's full retirement age benefit amount. So that's where the half comes into play, but it can be lower if they do it earlier.
Right. Okay, yeah. So one of the things that we need to take into account is that calculation, right? It's, hey, is your Social Security check at full retirement age less than half of your spouse's, and how do we best maximize a strategy to, maximize, someone's retirement or Social Security, income. So with that said, right, a lot of people ask specifically about that spousal benefit. A lot of people will ask me, well, do I have to let Social Security know? Do I have to tell them that this is the case, or does it automatically happen? Yeah.
So in the past, you had to let them know, but now it's called deemed filing, and deemed filing says when it comes to spousal benefits that once you become eligible for it, you meet all the criteria, it's going to automatically happen. So let me give you a case in point. It just happened yesterday. I had a conference call with an advisor and their clients. And so she turned her benefit on. She's had her benefit on for a little bit, and he just turned his on in January. And they were wondering if she was going to get spousal benefits. So we walked through the scenario. I got their full retirement age benefit amounts and did the calculation. I'm like, yeah, she should have already gotten them if you turned yours on in January, because she had hers on prior to. So she couldn't get them until he turned his on. So I'm thinking in my mind, why has she not gotten them? And then they threw in a nugget that they should have said at the very beginning. And the nugget was they just got married, and they won't hit a year until April 2024. Well, rules of Social Security says you have to be married. If you're currently married, you had to be married for at least 1 year before spousal benefits can be in effect. So I'm like, okay, so what's going to happen is April of 2024, she will now be eligible to start receiving those spousal benefits. Now, it's supposed to be automatic, but we are talking about a government agency here that is severely understaffed. So I told them, I'm like, look, after your 1 year anniversary, I'd be on the phone or set up an appointment to go in and say, hey, we've been married for a year now. I know I am eligible for spousal benefits. When can I expect those to be added on? And go ahead and kind of take the bull by the horns and don't wait for them, because it could be 3, 4, 5 months before they get to it. Now, you get paid for all those 3, 4, 5 months that you had to wait in one lump deposit, but why wait? Go ahead and get that deposited in there.
No, absolutely. And thanks for bringing up the 1 year rule. I know that, when folks, remarry in retirement, that's a big concern of theirs, right? Is how is this remarriage going to affect Social Security, right?
Well, and there's confusion too, right? Because you've got a rule for divorcees, and you got a rule for people who are currently married. So for divorcees, you had to be married for at least 10 consecutive years before you got divorced in order to have what's called a qualifying marriage. That's if you're currently divorced. But if you're currently married, for spousal benefits, you had to be married for at least a year. For widow's benefits, you have to be married for at least 9 months.
Okay.
So that's what confuses people, is they think everything's 10 years. No, that's only if you're divorced. If you're currently married, there are two different ones. So again, understanding all the different nuances and the different rules and how it applies to your situation is key in making good, solid decisions moving forward in retirement. And that's why you guys are where you're at, and that's why you guys call me when you have to answer those questions.
No, you hit the nail on the head there. And to your point, it doesn't only apply to Social Security benefits, right?
Sure.
It applies to everything that we're doing, whether it be on the investment side, the income planning side, all of that stuff. We try to drill into a lot of our clients' heads, which is, hey, if we if we plan for this in advance, well, then when something happens, unfortunate, right? Whether that be, a spouse predeceasing or, any number of things. Well, now we can say, okay, we talked about that back when we built your plan. This is what we're going to do. These are the knobs that we're going to turn to make sure that you still have that comfortable retirement. One other one that we get from a lot of folks is, hey, I turned on my Social Security, but now I want to, and that was a mistake, right? I turned it on. That was a mistake. Can I do anything as far as either turning it off and turning it back on, or how does that work?
Yeah. So with anything that has to do with Social Security, the answer is, well, it depends.
Sure.
Right. So here are the different scenarios that we could look at. Fortunately, there's only a few, so it doesn't take that long. Whereas we talk about spousal or widow's benefits, there's so many different scenarios. It's hard to go general. But if you're under full retirement age, let's start there. So if you're under full retirement age and you turn on your benefit and you're like, oh shoot, you know what, I want to go back to work, or I just got offered this great consulting job, or whatever the case may be. If you are under the first 12 months of turning it on, you can actually withdraw your application. It's Form 521, and it's just a one-page form. You fill it out, and Social Security is going to tell you how much you have to pay back. So you do have to pay it back, okay?
Gotcha.
But you can withdraw your application, pay it back, and they wipe your slate clean as if nothing ever happened. You can only do this one time. That's it, okay? So that's if you're under full retirement age, you goof up, you make a mistake or whatever, and you want to redo it. That's the only way you do it. Now, let's say you're under full retirement age and you turn on your Social Security benefits, and a year and a half later, you got this great consulting job,
right?
And you want to take it. And you know that if you continue taking Social Security benefits, that you will be subject to the earnings test, so you won't be getting anything. So you want to, is there anything I can do? And the answer is no. You're stuck at this point, because once you pass the 12 months, you can't withdraw your application and you can't suspend your benefits. You're done until you get to full retirement age. Now, when you hit full retirement age, whether you turn it on at full retirement age, or maybe you turned it on early, made the mistake, but it was after 12 months before you figured it out, once you hit full retirement age, you do have the capability of suspending your payments. So when you're dealing with suspending your benefits, it comes with a caveat. And so when you suspend them at full retirement age or sometime after, which is the only time you can do that, when you suspend your benefits, not only does it suspend the payments for you, but it suspends payments off of anybody else that's getting anything off of your work record. So spousal benefits, if you've got a children's benefit, so on and so forth. So it's important to understand that before you make those decisions. I mean, again, when would you rather know? Before or after? It's pretty important, right?
Right.
And so, but you have that capability of doing that, and that's the key to that.
Well, good. So really appreciate, all the knowledge that you brought. Even me, myself, I've learned a couple of things here. And this just is even furthermore to show kind of the audience that whenever you are making these, big decisions in retirement, and there are a few. Social Security can be one of them. You always want to have an expert on your side, right?
Yeah.
You want to make sure you're getting all of the, relevant information that is specific to your situation, so that you can make a good decision. And that's what we're here for, and that's what we enlist Hamilton for. So one last question I have for you, Hamilton. And this is, I know I've said this a lot, but this is by far the biggest question we get with respect to Social Security. And again, it's a more speculative question more than anything, but everyone, the first thing they say is, well, Social Security got run out. You had to know that was coming.
Yeah, I knew it was coming.
So what's your typical response when folks ask you a question like that?
Absolutely. So the OASDI does a report every single year, and it usually comes out May, June of the following year. So for 2022, it came out in May, June of 2023. So the last report said that if no changes are made to Social Security, by 2033, there'll be enough tax dollars coming in to pay 77 cents on the dollar. So here's what I tell people. Here's my 2 cents worth. I have obviously no evidence of this, but I just kind of know how these things work. That's not going to happen. They're going to make some changes. Here's the key. The key is this. This is not a new problem. This is not something that's been going on for the last 10 years. This is something that's been going on for decades and decades and decades. It's not new. The problem is that, and this is what I kind of tell the crowd when I'm doing a seminar, I'm like, what's the first order of business when a politician gets elected?
Get votes, right, for the next election.
They want to get reelected. Absolutely. And so in getting reelected, the last thing they want to do is mess with Social Security. Now, I know they talk a good game. They're always talking about how to fix Social Security, but when the rubber meets the road, you're not going to make everybody happy. And so there's going to be some tough decisions that have to be made. And the fact that they want to get reelected, they're pushing this thing off as far as they possibly can. But eventually, they're going to have to make those decisions. They're going to have to make those changes. I personally believe it's our generation that's going to get the brunt of it, those born 1960 and after. I believe that there's numerous things they are going to do and can do. One of those is changing full retirement age, currently at 67 for me. I believe it's going to go to age 70. There's some other things that they've talked about. I personally think that one of the best things they could do is to eliminate the taxable earnings. Right now, if you're paying into the system, paying the FICA taxes where your Social Security taxes go in, if you make over $160,200, any income over and above that you make for that year, you're not paying Social Security taxes on. Next year, it's going to go to $168,600. Well, why? Why have that? If you're working, pay the tax. Whether you're making $50,000 a year, $500,000 a year, $1 million a year, just eliminate that, and everybody's paying in that. Will it eliminate the problem? Probably not, but it will definitely give us many, many, many more years. Whereas right now we're quickly getting to 2033.
Well, and I'm glad I heard that coming from you, because largely that's what we tell folks, right? They, to your point, even the full retirement age has been moved back. 67 wasn't where it was originally, right?
Originally it was 65.
Right. So they moved it back then. They would probably move it back, to your point, in the future. And they can, if they there are fixes, I guess, to your point. Not one fix, but a multitude of fixes. And to your other point, no politician wants to be remembered as the one that Social Security benefits got cut by 30% when they were in office or anything like that. So, largely we tell folks that. And with respect to the full retirement age, right, I guess there could be an argument to be said that, hey, future generations are going to live longer, so maybe the full retirement age should be higher. But in any event, I think the overall theme is, to your point, they're going to do everything in their power to make sure that, people's, irrespective of what side of the aisle you're on, to make sure that people's Social Security checks, aren't affected.
Eventually. They'll eventually get to it, right. They're going to have to. Their hand's going to be forced to do it. And that's the key, unfortunately, we need it done now versus later, but I just know how our government unfortunately works as a whole, and they're going to kick that can down the road as long as they possibly can before they have to do something.
No, absolutely. Absolutely. Well, Hamilton, I want to thank you again. You've been awesome today. I think we got a great bit of knowledge out there for folks to kind of wrap their head around some more general things about Social Security. But I think you would agree the overarching theme of what we talked about today is you most definitely want to get with someone, a financial advisor, a financial planner, but you want to get with someone to help walk through your specific situation, because everyone's situation is different, and Social Security, ties directly into that.
Yeah, for sure.
You've been listening to a conversation about Social Security with Social Security expert Hamilton Morales, Senior Vice President at Financial Independence Group and a Social Security expert. Chase Lopez, of course. Always enjoy talking with Chase on these podcasts from ILG Financial. This is the Retire Your Way podcast, always brought to you by ILG Financial, Stafford, Virginia. ILGfinancial.com is the website address. 540-720-5656 is your number to call if you'd like to have a conversation. 540-720-5656. Income, legacy, growth, it's all right here at ILG Financial. And it's about helping you plan for retirement your way so you can achieve your financial goals. ILG Financial, this has been the Retire Your Way podcast with Chase Lopez. And Dave Lopez will probably be here next time. Either Dave or Chase we'll talk about on our next podcast. Thank you so much for listening. My name is Ron Stutz. Have a great day. The information provided is for educational purposes only and is not intended as investment advice for any individual or entity. All information contained herein is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. The views presented today are those of Dave Lopez and do not necessarily represent the views of the Alpha Star Capital Management, LLC. The opinions expressed are subject to change without notice and do not constitute financial, legal, or tax advice. Please consult your financial professional before executing any financial strategy. Investment advisory services offered through Alpha Star Capital Management, LLC, a registered investment advisor. Alpha Star and ILG Financial, LLC are independent entities. SEC registration does not constitute an endorsement of the firm by the Commission, nor does it indicate that the advisor has attained a particular level of skill or ability.